Hey everybody, it's JJ here. You're watching Bull Boom Bear Bust. It is July 15th, 2021. All right, Bulls and Bears, we've got some numbers to go through and some things that we need to discuss. And it's pretty concerning because right now, hardly anyone in the US, and I'm going to show you a chart on this here in a minute, hardly anyone is worried about an economic collapse or even a recession. Also, we're going to look at the latest jobs number, and it's going to tell us that things aren't really improving at all. But there's a couple headlines we want to look at. All right, so let's go to this trend search. This is how many people are searching for a certain word or phrase on Google, and we see economic collapse. It's something that was searched for widely right during the financial collapse of 2008. Of course, when it was happening, that's when most people think about it. And remember, the banks pulled back on the lending, and we had some major financial institutions fail, and a lot of things happened. But since then, there haven't been many changes as far as structural changes to the monetary system and the lending system. But we've sure had a lot of jawboning from the Fed saying they're going to be there no matter what. So look at this confidence, because the surge financial collapse, it trended a bit here over the past few years. I mean, since 2008, over the past 12 years. 2012 all the way through 2016, 2017, and then it dropped off a cliff, and now it looks like hardly anyone is searching for the term economic collapse like they used to. So please chime in on this, people. Are people that confident that the money printers, that the Fed is going to be there to support these markets no matter what? Because to me, it should be the opposite. Coming out of the financial crisis, that's when fear should have been the least and confidence should have been the highest. But now it seems like it's the opposite. Now when we have the Fed just pumping in billions into the banking system, almost $1 trillion a night when you look at the reverse repo on some of these nights. Home prices way past where they were at the peak of the last housing bubble. Debt in all categories much higher than it was last time. More people can't make their rent payment. Still almost 2 million people can't make their mortgage payment. But yet confidence is the highest now, and people searching for economic collapse is the lowest that it's been since prior to the financial crisis. Pretty interesting, right? Now let's put another word in here to make it a little bit even more interesting here. This search tool allows you to add in a second word and compare it. Let's see how many people are looking at mortgage, people looking to buy a home and get a mortgage. So that's actually increasing here compared to when you look at 2008 to 2014, 16, 14, 15, 16. So economic collapse has dropped off a cliff, but people searching for mortgages is actually amongst the highest that we've seen on this chart. Except for, of course, right before the previous housing bubble went bust. How are people this confident that the money printers are always going to be there to keep this debt-based system propped up? The same people, the money printers, that are wrong most of the time. They said inflation was temporary. It's not temporary. We're seeing prices rising month after month. There's a few areas where prices are dropping. That's lumber and a few other things here and there, but mostly 90+% of consumer items that we have to purchase are going up. To me, this chart spells danger. It looks like people are not worried. They're way too confident. Even though things are starting to slip back in the wrong direction. We have most people, again, living paycheck to paycheck. Incomes actually went up during the pandemic shutdown as people pulled back on spending. But here we are back again, and things are actually even worse than where we were before, because we still haven't gotten all the jobs back that were lost. Let's take a look at that next. Jobless claims for this week hit a new pandemic low, while New York manufacturing notches record high. Now, does that mean a lot of manufacturing jobs are coming back? No, not at all. It means that there's a lot of pent-up demand that accumulated during the big shutdown, and now you have this big surge in demand for goods. Right, here's an example of that. When the chip shortage finally is fixed, you will see a spike of cars for sale coming on the markets. Right now, there's millions of cars on the sidelines. waiting for chips. Once the chip manufacturing gets caught up to the vehicles that need them, that are ready to be put on the lots, then you'll see a big jump in automobile sales, because right now inventory is really low. And that will make it look like things are booming. It's going to look like a big recovery, but a lot of it's just going to be pent-up demand because of the lack of inventory. The same thing would happen if there was a bunch of new homes built. Very quickly you would see a surge in sales, making it look like an economic boom, when really it's just pent-up demand, and in most cases just people taking on more debt to make the purchase. Also, let's talk about this. Something else that you should be aware of. Look at this headline out of CNBC. Fed Chair Powell grilled by grouchy senators over inflation and climate change, even as economy rebounds. So do you really think the senators are grouchy? I don't think so. Of course, they may act grouchy so people think that they're working for the people, but in the background they're getting rich just like everybody else in the little club that we like to call our leadership. Right? Another recent article and something Janet Yellen has expressed. She sees several more months of rapid inflation, worries about impact on home buyers. Well, Ms. Yellen, it's pretty simple. How's about stopping banks from loaning out money that they actually don't have? How's about raising interest rates? And how's about tell the banks if they loan out too much money, then there's going to be no rescue for the banks, no more bailouts. It's pretty simple. That would stop the price inflation. Because if that were to happen, if the banks were to be told that information, banks would severely, drastically pull back on their lending. Then you would see asset prices come down. But when you see continuous lending, continuous debt, aka credit, given out to the population, continuous bailouts and support for the markets, for the banks, and guarantees that the banks are too big to fail, where you're going to see continuous rising prices. But I guess Miss Yellen doesn't know that. Maybe she's still learning. You're never too old to learn, right? Let's take a look at this. Speaking of propping up the housing market, let's take a look at the bond market today. Treasury yields and mortgage rates. Look at this, 10-year Treasury down to 1.297, another drop of over 4%. And you know what that's going to do to mortgage rates. Let's take a look here. 30-year mortgage rate chart. And this is a 1-year chart. Look to the far right. Mortgage rates are dropping once again. Remember when they started ticking up here at the beginning of the year, February, March, people were talking about mortgage rates are going to rise. You better buy a home now. And here they are dropping once again. Thank you, Federal Reserve. Keep preparing, folks. Prices are going to continue to rise. No stop. No signs of this stopping. The inflation monster continues to roar. What's going to stop it? You let me know, people. Thanks for being here. Stay well. Keep stacking. Link to the best silver place, in my opinion, down below. That's SD Bullion. I just did an order 2 days ago, and they already have it in the mail to me. Not giving investment advice, but you may want to hedge yourself against this madness, this inflation monster. Keep stacking, everybody. Stay well. Until next time, peace. Bye.